As the economy grows sluggishly, the global hiring market is cooling down. Low demand in the job market and cost cutting by companies have exacerbated the challenges in the talent acquisition process, as the employees tend to stay with current employers. CEO of a leading global recruiting firm, Gary Burkhardt, showed Taipei as well that the market could, however, revitalize if the financial service sector starts to hire again.
What we tend to see in our industry is that, yes, when we look at hiring volumes globally, they go up and down. That's one. Another variable is, of course, when interest rates go down, it tends to be favorable in what we do, as an industry. But where it is interesting is when the financial services industry starts hiring again, because they tend to bounce back as the first ones from let's say, a slowdown. And if the financial services industry starts hiring because they see the money flows coming and going, then the rest of the economy tends to have, in the next few months, also a rebound in hiring.
Having monitored the talent acquisition market in Southeast Asia for more than 8 years, the CEO emphasized that the major challenge is the traditional way of thinking, adding that the fundamental skill for a relevant position is more important.
Southeast Asia still has a fairly traditional way of thinking. If they're looking to hire somebody, they would like to have the person to have a good educational background that they like and to come likely from the industry. Whilst the world is now shifting to a skills-first approach, which means they care less about, did you study at Chulalongkorn or Thammasat? Do you have industry experience becomes irrelevant, but what they want is, do you have the skill to do the job you need to do? And that is letting go of the educational background and, of course, the industry knowledge, because in a lot of cases, especially in the tech world, it becomes industry agnostic where you come from. As long as you know the tech part, you'll be able to do the job. So that's one big piece. I think the second one is that at the moment there's a lot of hesitation of talent to move, because, like I said before, people are a bit scared at the moment. So the confidence is lower, and they call this the big stay.
In addition to putting more focus on employee skills, Gary suggests that the Thai government needs clearer approaches to shifting the production of combustion engines to EV batteries. While other Southeast Asian countries have unambiguous strategies to attract foreign direct investment, Thailand is facing an imminent risk as two of the largest Japanese automakers plan to close their factories.
There's only a few places that are actually in the winds of global headwinds, for example, Singapore, where the financial services industry is definitely affected by what's happening at the moment. I think a lot of countries in this region are competing now, with really trying to capture that foreign direct investment into a Vietnam or an Indonesia or in a Thailand. And I think that what governments are doing is trying to lower the regulatory framework to ensure that those investments are coming their way. And I can give you a few examples. If you see what Vietnam is doing on the green economy, for example, at the moment, fascinating to follow what they're doing with the regulatory framework to really attract this type of technology coming in, but then also partner with the local providers of that. An interesting sector as well is the EV sector. How are we going to deal with electronic vehicles moving forward, or the wider electronic mobility? And for example, in Thailand, there's a big question mark on how you're going to shift from combustion engine production to EV cars. And in Indonesia, you can see the supply chain being differently followed, because the production of cobalt needs to be increased to produce those batteries. And then, of course, our digital infrastructure in this region needs to be upgraded.
Feng Kanxi reporting for Taipei US World.